Hello and welcome to this edition of the video market update from Orbex.com. And today we have a lot of fundamentals that were announced last week, which had continued to have a very important impact on the market. But the first thing that we'll start in again is the US dollar index, which remains also on the downside throughout last week. Until the end of last week, we had some sort of a very short recovery here, but at the same time, the gap is still unfilled, which that's why I would still suggest that we might see more an upside in the next few days and in the next few weeks, at least to cover that gap that we saw last week due to the French election. However, don't forget that next week we have the second round of the French election, and so far, despite the fact that all of the public polls that basically suggesting Macron to lead, however, Marine Le Pen is also up by almost like 2 points right now. We're talking about 40% for Marine Le Pen and also 60% for Macron. Yet there is still a possibility for recovery for the US dollar, at least in the next few days, and to see more upside ahead, probably toward the 100 to cover the gap. But one of the things that also might not help the US dollar again this week was the US GDP. The US GDP for the first quarter of this year came in and came in with a very bad number at 0.7%, despite the fact that estimates were above the 1.5 or 1.7%, but we are 1% short on the expectation. This is the second quarter of slowing down in a row, and the weakest growth since almost the first quarter of 2016. With such numbers right now, I mean, this is probably might wait on the US dollar again to break above to continue in raising rates in the next few months and the next few meetings, and therefore that would be another reason or another excuse for the Federal Reserve not to raise rates. And this is why, again, I still believe that we might see more downside ahead in the US dollar, but I still believe again that we might see some upside, at least to cover the gap before the trend continues. Last week, a close was still below the 200-day moving average for the first week since almost more than 6 months, since October of 2016. We haven't seen the US dollar actually closing 1 week below the 200-day moving average. That's why there is still a chance for more pressure to the downside, but I would love to see a cover of the gap that would create it last week. Going further into more fundamentals, we saw the ECB decision last week, and it was actually in line with the market expectations. However, the QE tapering is underway with 20 billion, and now is below the or compared to the previous one. Now we're at 60 billion euros compared to 80 billion last month. But at the same time, the ECB noted that the recent rise in inflation is not a trend, and this is why the euro did not even pick up more gains during that day, or at least during the ECB decision. But at the same time, on Friday, we had this huge uptick in the core CPI, which is the core inflation, excluding the energy and food, at 1.2%, up from 0.7%, and this is almost a double, and this is the highest level since almost Q2 of 2013. So that's basically but the ECB might not really accurate regarding inflation. However, this is again one of the reasons why the euro picked up some gains at the end of, or at least at the beginning of Friday's session. But if we look at the chart for the euro again, we still haven't covered some of the charts here, like on some of the trading platforms are not showing any gaps on the euro. But however, so far the euro is still haven't covered the gap, at least on the daily chart, and this is where we can show you here. Yeah, the euro is still actually, the gap is still unfilled so far, which is 107.20, 107.30. And however, the euro made it clear actually on that day. We had a very huge rally, at least almost to 109.50 on Friday morning, and continue all the way back down 108.95 at the end of Friday. However, the daily close and the weekly close was well above 108.64, which is a very solid support area. However, I still want to see another leg lower in the euro, all the way to 107, at least, to see some sort of a cover of the gap before the trend continues. Going further also to our favorite weekly charts, especially for the and New Zealand dollar. The New Zealand dollar had a very clear breakdown following the inflation data from New Zealand last week, which wasn't that really good. But this is the first weekly close below the 100-week moving average since almost November of last year, which basically clears the way for further downside ahead, at least in the Kiwi right now. But we will be looking for at least some sort of a support area around the 68.14 here. We have to watch it, but bear in mind that the technical indicators are heavily overbought, but the RSI is still posting or pointing to lower. This would be a chance for another leg lower towards 68.14 before any bounce or before any retracement to the upside. Going forward also to the Aussie continued also to trade within the same range for the past 3 weeks. However, we broke finally below the 50-week moving average, but we're still around the same support area, 74.86, the one that we talked about it last week. But despite that, the technical indicators are weak. We're still seeing some sort of another leg lower, maybe probably toward the 74.13, 74.15 to test the 100-week moving average. Even on the daily chart doesn't even look that good, and this would be actually a very good breakdown and just a retest on Friday, and actually failed to break after Thursday and Friday, and this is basically what might be a chance for further downside ahead. Looking into the Japanese yen, continued also 3 days in a row to test its 50-day moving average without any clear break above that level, which is a very important level also to watch. However, the recovery in the US dollar might lead again for another spike higher, maybe toward the 112 or even 112.50s to test the resistance area, the one we saw last few weeks around 112.20 before any downside or any leg lower. Especially that the technical indicators right now are happily overbought, at least for stochastic, but the RSI is still far away from the 70s, but still giving a potential for another spike higher before the downside trend continues. And also, if we want to use some of the trend lines here, this might be actually a confluence around the 1220s, might be 1390 or 1320s, where the 100-day moving average also is located. The British pound continued also to rise further, also on more good news, and at the same time the elections and the general elections that everybody is waiting in June. It continues to give the British pound more and more gains. At least this is basically opens the way, especially after last week and after last week breakout above the 28.78, which used to be a former support area here during after the flash crash, or after the June referendum of the Brexit. So right now we're regaining above that resistance, which is very, very good, and at the same time this opens the way for at least another bull run toward 130, probably 130.61. That will be one of the levels to watch, at least shorts, or like at least the sellers are likely to appear. Finally, we're looking at gold and silver. Gold continued to stabilize pretty firmly above the, as we said before, above the 200-day moving average, which is very, very good, at least at the same time above the 1260s, which should continue to act as a support area, because it's a former resistance area here that was the top of this year at the beginning of at mid-February. But right now we're still trading above that resistance, which basically is still seen as a very positive sign. I still believe that any downside pressure might be also capped above the 12.53, where I'll be expecting more buying to hold again all the way back to 12.89 and probably to test the 300. Silver has a little bit of a different story here. We had a very huge breakdown last week. More sellers were digging in. At the same time, we closed the week below the 100-day moving average for the first time since also March. However, the 100-day moving average also last time held just only for a few days, and then we broke all the way back up. At the same time, the Fibonacci is still around the same levels. I would not comment that much on silver for the time being, but there's still a possibility at least to rise again, as long as the 1682 support area, or the former support area, remains remains solid. So this is it for the week in terms of the technical and some of the fundamentals that we were watching last week. We'll be also publishing more and more reports about the French elections and more fundamentals figures that we'll be looking for during this week. Sorry, I haven't been able to do the video longer than that to talk about a little bit more about fundamentals, but we'll definitely do that during the week or maybe in next week's video. So this is it for this week. Thank you for watching. If you have any questions also, please leave it below the video and I'll get back to you as soon as possible. Thank you for watching. I'll see you once again next week.